Hello everybody, this is Max and this is DexSignals.com. First start out with this risk disclaimer. Everything we're about to show you, we can't guarantee you. I don't want to sit here and read this whole thing, so take a few seconds and just breeze through this thing and really have a look at it. Make sure that you feel comfortable with what's about to happen. In this video, we're going to show you how to take our signals, apply them to Nadex, and go from there. And what each one little thing means as we build up what we refer to as a contract to a deal, everything else, okay? When you get our signals, they look like this, okay? You'll get an email. Now, I can't show you my phone, but you'll get a text as well. So if you're out and about, you can use the handheld phone device or an iPad or what have you. You'll get the signal. You can then go in and use your application on the phone to get everything happening, okay? So when you get this, you'll get a few things here. This is for our daily British Gold Pound USD long-term process here. So in our trade here, but this is what it looks like. The time is 7:30. Okay, that's when we got. That's when we got short. You can even see 7:30, 13 hours ago here on the 29th of June. It'll tell you the pair. Okay, it'll tell you the direction that you're going to buy it in, and we'll show you what that means on the other side. We're going to show you the price to get it at. We're going to show you the expiry to get it at, and we're going to put a note in here, a scalp, okay? Or it's going to say to expiry. That's the only two versions you have in your scalp, to expiry, or both of them. You could do either or, okay? So let's keep that in mind. So in this one, this was a previous one that happened 13 hours ago. Guess what? We won that one. How do you know we won? Well, if you go to anytime you can go to performance. You can track our day-to-day performance, how well we have done. Of course, let me see, 629, here we go. See, 1, 2, 3 trades. There's actually 6 trades that we're still putting the other 4 in. But look at this, win, win, win. Got a scalp, to expire, so that's big. When you scalp them, you tend to take about half to 40% what you normally would make on a trade. You get out, only because there's a possibility it could still lose. But we don't want to take that chance. The scalp is 100%. It's money in your hand, and so we love that, okay? Now, you've already seen what the trade looks like when the signal looks like when it comes over, okay? Boom, boom, boom. Very easy to read, okay? You'll also get it into the Facebook group that you're in. If you go into the group, you'll get that in there. You'll get the first one for the day if you're in there, of course. And then what you do is you pop over to Nadex, real simple. You log in, you go to British Pound Gold USD, you would go to the 3 p.m., you would then choose your strike. If it was a buy, you'd be going to offer. If it was a sell, you'd be going to bid. Real simple. Buys are blue, sells are red. Okay? Buys, sell. Buy, sell. Simple, right? Okay. So once you found your expiry and you knew what it was, in this case, we're not going to have this one on here anymore, but it was 56.80. There's no way, I don't think that one's on there anymore. All right, there it is right there. Okay, but it's not going to be that. All right, so, but this is the demo account, so let's just pretend that that was it, okay? So we had the 3 p.m. I would then come over, and it was for a buy. I would then put my one contract, or however many I am willing to risk compared to my balance, okay? So in my case, I can afford to do 10 contracts, right? Okay. So then I would place the order, and it would get filled in what we refer to as open positions. Now this means that it's an open position is that contract has been fulfilled. That amount of contracts have been fulfilled, and this is now working the process. Now as soon as you do, the amount that you risked, okay, the overall amount gets deducted from your account. So keep that in mind, okay? Now this money is active. It's on the market, okay? Now why are you 65 in the hole as soon as you do that? I know, kind of sucks, but if you travel over the line that you got into, you'll see that there's a difference between the bid, okay, and the offer. In this case, $6.25. So in the case we got 10 contracts, that's per contract. So 10 times 625 was $65 at the time. As the indicative price, okay, the indicative index, the cost of the stock itself, goes up and down, so will your profit and loss margin. Okay, because the current market price will change as well. Now, the current market price is made by market makers and Nadex themselves. So they're working the prices in and out of profit and loss at any given time, depending on how much you purchase it for and how much you're going to sell it for. Excuse me. Now, what it means when you have plus 10 here is that you did an offer deal. It would say minus 10. Let's say if you got that one. Now look what happened. I just did a trade and it jumped down to working orders, which meant that it still needed to be filled and was taking a second, so it wouldn't jump down here. Sometimes that may happen, so you got to make sure working orders is there. Now you can see here that the minus 10 is on the one I just did at 5,800. Okay? And it gave me a price that I got into at 55.25. Well, back then it was 55.50. Okay? And the spread between it was $7, right around. Okay, so it's changed. 10 contracts times 7, 6,500, or 65 minus 65. Now the position value is how much it all costs together. It's very, very simple. As the price indicative index goes up and down, so will your profit loss. And the closer you get to expiry, here it says 18 hours and 2 minutes, but sometimes you may even be even closer to something, say such as something like here. Okay, and we're too close now to even think about getting in at this intraday 9 p.m. because it's 8:55 p.m. my time when I'm making this video. Okay, and there's only 1 minute and 48 seconds left. Which brings me up to another great point. Once you get in, if you're taking anything to expiry, the last 2 minutes of any deal becomes unavailable to trade upon. Mostly because nobody wants to get in the last second. The market makers and the Nadex doesn't want you just buying a whole bunch knowing that it's going to be above that fast within the last 2 minutes. It creates a lot of havoc. It takes a couple minutes for some of these deals to go through, so you got to be careful. Nadex wants you to be careful, and so do you. Okay? Now, as these trades progress through time, there's a thing called time decayance. So sometimes these prices will change, even though the indicative didn't change. Time is changing. So sometimes these profit and losses will be changed around because the position value will change and the current market value will change, which will change your profit and loss. Okay? So very simple. What is a scalp compared to expiry? As you've seen on this one ticket that we had done, it's called, you want to do a scalp. Well, very simply, once you start to get into profit, you can see we're not in profit right at the moment, but we're in a negative. Okay? So if this was getting into the profit margin, if this was in plus 80, you could easily get out of it at any time or set a take profit. And that's what we're going to show you in the next couple of videos, is how to do a take profit or take a loss or to get out of a deal. Now, because we bought into this deal, this trade, let's get back to that 3 p.m. over here, okay? Because we bought into this trade, we did an offer, and we got it for $79. How much money can we make if this were to go to expiry and win? Well, because every deal needs to resolve at 100, when you do a buy, whatever it here is in the average price, that's how much you risked. So, $100 minus $79 is $21. So $21 per contract times 10 equals $210 that you could win for this trade because we did 10 contracts. If you did one contract, it'd be $21. Now, there's also a fee of 90 cents into a contract and 90 cents when you sell a contract up to 10 contracts. So anything more than 10 contracts, you don't have to pay for. Pretty cool, right? It's the same for when you do a sell. But there's a little bit of a reverse. When you do a sell, the number for the average price, what you bought it for, is how much money you can win. Now, how much money you've risked is the opposite. So that's the minus of the 100. So you could actually, in this case, it'd be 84.50 that you risked. Okay? So you got to keep that in mind as you're doing these. Where can you see that when you get in is when you first click onto it and you put your amount in. It'll easily tell you right here what you're risking compared to what your max profit is. All right? Now, in order to get out, if you're going to do a manual get out or a scalp, or let's say you just don't feel comfortable and you're really, really losing and you got to get out, which let me tell you, don't get out in some cases. If you're in the red, anything that you're putting on these trades, be prepared to lose. Okay? Premature removal, sometimes because a market goes up and comes down, up and comes down. I'm pretty sure you're going to feel awfully terrible if your market's going like this and it starts to come down and you start to get panicked because your strike price is right here and you think you're going to lose. So you get out right here to save yourself some money. And then it comes down and it goes back up. And then the time is right here and you win. Okay? And you got out right here. Now, you're not happy. Okay? And that's the way it can come and go, of course. All right? Sorry for the very bad drawing there. That is terrible. But you get the gist, right? You don't want to get out premature, especially on these trades. We're 98% success rate. Even if you do lose one, it's because something very odd happened in the market. All right, we're very good at recognizing clear paths to expiry. All right, so keep that in mind. But let's just say you did have to get out. What do you do? Well, whatever position way you bought in, if you click over here on the number itself, it's going to bring it up in the opposite. So since we got in on an offer and it was blue, it's red when we click on it here, and it'll have our size of our lot that we bought it at. Okay? Now, sometimes that price may change. If the price changes too much, it's going to go down in working orders. Okay? So make sure you keep it clear. Okay? And then you simply hit place order. And it disappears. Okay? Now, sometimes you can set it in advance and you can put an amount that you want to be able to pay, and it'll just disappear because it may have reached that already, or to put it down in working orders and keep them both up there. Okay? So very, very simple. When you're getting in, it'll immediately tell you what your profit and loss is. You'll place the order. You'll have your profit and loss will automatically, as soon as you come off, because there's a spread between the two. Okay? And then what happens is, as time goes on, as things happen, we're going to show you some live trades. Okay? As these things happen, you'll definitely see a difference in your profit loss. You then simply come out and you can either scalp it and take that profit and loss, or you can let it go to expiry, which would be the time period, and it'll have a countdown here, and you'll win it from that line. Okay? This is about as much as I want to teach you here. I want to get in and start showing you some live trades as soon as we do. Again, you have your demo. We're going to be giving you signals for 2 weeks here at this process. For however long, if you've bought into the process, you want to learn this as much as possible. Follow all the signals. Get in for what you feel your balance would be. And then in the next videos, we're going to talk about risk management. We're going to talk about how to use your balance and how to money manage your process here in the future. All right, I'm Max, and this is DexSignals.com.